What's scarier than your SAT scores? Your bank account after one semester of college. I'm serious. The average American student graduates with over $30,000 in debt, and most of us were never taught how to handle money in the first place. But here's the good news. You're about to change that. In this video, I'm breaking down everything you need to know about managing your money as a high school senior. No boring lectures, no complicated jargon, just real talk about real money that'll save you thousands of dollars and years of stress. Whether you're heading to college, starting a job, or figuring out your next move, this is your complete guide to financial management. Let's get into it. Banking and budgeting basics. First things first, let's talk about where your money actually lives. You've got two main accounts you need to understand. Your checking account is like your wallet. This is for everyday spending. Your debit card connects to this and you'll use it for gas, grabbing lunch, online shopping, whatever. Money goes in from your part-time job, money goes out for expenses. Your savings account is exactly what it sounds like. Money you're not touching. This earns you a tiny bit of interest, meaning the bank actually pays you for keeping money there. Not much, but hey, free money's free money. Now, debit versus credit cards, huge difference here. A debit card pulls money directly from your checking account. You've got 50 bucks, you can spend 50 bucks. Done. A credit card is borrowed money. You're basically taking a mini loan every time you swipe, and you've got to pay it back. We'll get deeper into credit in a minute, but remember, debit is your money, credit is borrowed money. Okay, budgeting time. I know, budgeting sounds boring, but here's the easiest formula ever. The 50-30-20 rule. 50% of your income goes to needs, stuff you can't live without. Car insurance, gas, phone bill, lunch money. 30% goes to wants. Netflix, concerts, that new gaming headset, going out with friends. 20% goes straight to savings. And yes, this is non-negotiable. Let's make this real. Say you're working at Target making $500 a month. $250 covers your needs, $150 for fun stuff, $100 goes directly to savings. Track this with free apps like Mint or just use a simple Google spreadsheet. The key is knowing where every dollar goes, because when you track it, you control it. When you don't, it just disappears. Building credit smart. All right, let's talk about something that'll impact the next decade of your life, your credit score. Your credit score is basically a report card for how responsible you are with borrowed money. It ranges from 300 to 850. Anything above 700, you're golden. Below 600, you're gonna struggle. Here's why this matters right now. Your credit score affects everything. Renting your first apartment, landlords check your credit. Buying a car, your interest rate depends on your credit. Getting a phone plan, some carriers check credit. Future job applications, some employers look at this. Your credit score is literally your financial reputation. So, how do you build credit as a high school student? 3 smart ways. Number 1, ask your parents to add you as an authorized user on their credit card. You get a card, their good payment history helps your credit score. Just don't abuse it. Number 2, get a secured credit card. You put down a $200 deposit, that becomes your credit limit. Use it for small purchases like gas. Pay it off every month, and boom, you're building credit. Number 3, student credit cards designed for people with no credit history. But here's the golden rule, and I can't stress this enough. Never carry a balance you can't pay off immediately. Credit cards charge insane interest rates, like 20 to 25% annually. That $100 purchase becomes $125 if you don't pay it off. Treat your credit card like a debit card. Only spend what you already have. Pay it off in full every single month. One mistake here can haunt you for 7 years. Seriously. Saving and Investing 101. Let's talk about building wealth. And yes, you can start doing this right now in high school. Step 1, emergency fund. Life happens. Your car breaks down, your phone shatters, you need to buy textbooks, whatever. You need cash available for emergencies. Start with a goal of $500 to $1,000. That's your safety net. The secret to saving is pay yourself first. The moment that paycheck hits your account, transfer your savings percentage immediately. Don't wait until the end of the month and save whatever's left over because there won't be anything left over. Automate this if you can. Now, here's where it gets exciting. Investing. Albert Einstein called compound interest the 8th wonder of the world. Here's what that means.
Let's say you invest just $50 a month starting at age 18, with average stock market returns of about 10% per year. By the time you're 65, that's over $470,000. Yeah, you read that right. $500,000 from $50 a month. Start at 30 instead, you'd only have about $150,000. Time is literally money when it comes to investing. You've got a few options here. Stocks are tiny pieces of companies. Bonds are basically IOUs from the government or companies. Mutual funds and ETFs are baskets of stocks and bonds bundled together, less risky because you're diversified. For most students, a Roth IRA is perfect. It's a retirement account where you put in money after taxes. It grows tax-free, and you don't pay taxes when you take it out in retirement. You can contribute up to $7,000 a year. Apps like Fidelity have youth accounts, or you can use platforms like Robinhood once you're 18. Start small, even $25 a month matters. The key is starting now and being consistent. Remember, time in the market beats timing the market. Just get started. College money matters. If college is in your future, listen up, because this section could save you tens of thousands of dollars. First, FAFSA, the free application for federal student aid. Fill this out every year. It opens October 1st, and some aid is first come, first served, so don't sleep on this. This is how you get federal student loans, grants, and work-study opportunities. Speaking of loans, federal student loans versus private loans. Federal loans have lower interest rates, better repayment options, and possibilities for forgiveness. Private loans from banks? Higher interest, fewer protections, less flexibility. Always max out federal options before even thinking about private loans. But here's the best loan, the one you don't have to pay back. Scholarships and grants. Seriously, there are thousands of scholarships out there. Local businesses, community organizations, national competitions apply to everything. Even a $500 scholarship is $500 you don't have to borrow. Dedicate 1 hour every week to scholarship applications. Treat it like a part-time job, because it basically is. You're earning money for your education. Pro hack: consider starting at community college for your first 2 years, then transferring to a 4-year university. Same degree, but you could save $30,000 to $50,000 easy. In-state tuition at community college is often under $5,000 a year versus $20,000 plus at universities. Final rule on student loans: only borrow what you absolutely need. Just because you're approved for $50,000 doesn't mean you should take it all. That debt follows you for decades. Borrow smart, borrow minimal. All right, before we wrap up, let's talk about the money traps that destroy most students financially. Trap number 1, buy now, pay later services. Klarna, Afterpay, Affirm, they make it so easy to split that purchase into 4 payments. But here's the thing. If you can't afford it now, you can't afford it in 4 installments either. These create the illusion you have more money than you do. Plus, miss a payment, fees, and credit damage. Trap number 2, subscription creep. Netflix, Spotify, Disney Plus, that gaming subscription, the app you forgot about. These $10 and $15 charges add up fast. Audit your subscriptions every 3 months. Cancel what you're not actively using. Trap number 3, impulse buying triggered by social media. Instagram ads, TikTok shop, influencer codes. It's all designed to make you spend now. Use the 24-hour rule. If you want something, wait 24 hours. If you still want it tomorrow and it fits your budget, fine. But most of the time, that urge passes. The difference between financial success and financial stress often comes down to these small daily decisions. Make them count. All right, we've covered a ton in these 8 minutes. Here's your action plan starting today. 1. Open a savings account if you don't have one. 2. Create your first budget using that 50-30-20 rule. 3. Start learning about investing, even if you're starting with $10. 4. If college is coming, get that FAFSA done and apply for scholarships. 5. Avoid those money traps we just talked about. Financial literacy isn't taught in most schools, but it's one of the most important life skills you'll ever learn. Every smart money decision you make today shapes the life you'll live tomorrow. Your future self, the one who's not drowning in debt, who can afford that dream apartment, who retires comfortably, that person is counting on the decisions you make right now. If this video helped you level up your money game, smash that like button and hit subscribe for more practical finance tips that actually make sense. Drop a comment below telling me what money topic you want me to cover next.